making sense question. Should I sync my Shopify, Amazon, and Faire sales into QuickBooks Online using a tool? That's a great question. Clearly, in the software as a service world we live in today, where we have all cloud-based apps, a great part of efficiency or workflow and processes is efficiency via sharing data between systems. With that being said, we need to be very conscious of what data needs to be put into which system. And the reason that is a couple things, right? Is number one is, does all that data need to be in the system? And if so, or if it doesn't, then is it just going to bog down and slow the system down if there's a ton of customer data, let's say, in there? The other situation is if we sync every individual transaction in automatically, is there going to be issues where there's error messages or things that bomb out or things that don't come through, adding maybe refunds that then impact my financial reporting, that then I have to duplicate the time and effort in all of this. So with all that being said, basically, one of the big sync tools is called A2X, right? A lot of our clients come to us and say, hey, I have all my Shopify sales syncing into QuickBooks Online. I have all my Amazon sales shipping to QuickBooks Online. So basically every day I see my revenues, I see my payments in, so I have real up-to-date financials, which sounds in theory great. The problem with that is that, number one, if you sell 10,000 orders a month, there's then 10,000 individual orders in QuickBooks plus 10,000 individual customers. John Smith, Jane Smith, Brad Ebenhoeh, Michael Burke, etc. That then bogs everything down and slows the entire process of where you're going with that. Number two is, depending upon how you set up the system and the integration, sometimes the transactions don't flow through accurately, or either they bomb out or error out. One easy example is, let's say you sell your or do your promotions and samples through Shopify because your 3PL is connected to there. Well, then what if you're going to do a $100 order, then you do a $100 discount that's for promo, so the order at the end of the day is $0. And what if, because of how you segment or set it up in Shopify, that it syncs over to QuickBooks as a $100 gross revenue order plus a $100 discount, that then basically then artificially inflates your gross revenues and artificially inflates your COGS, right? Because then you're calculating the COGS based upon the sales. So there may be reasons why you shouldn't have everything sync in. At Accountfully, what we do is we don't sync individual orders in. We either do daily summary orders via, if we're using an inventory management system like Faire, or we just basically do an end of the month entry where we export data at Shopify or Amazon, summarize all the gross revenues, the discounts, the sales taxes, the shipping income, etc., break out the promos and the samples, and then we're able to then easily post that in QuickBooks Online, calculate the cost of goods sold, calculate the promos and samples, and then put those within the advertising section. That whole process there is much more efficient from our perspective, and it has the ROI there of what the data you really need in QuickBooks, because you don't need QuickBooks to be your CRM. Shopify has your customer data, Amazon has your customer data. Those two tools should be synced to some other CRM to then manage your mailing list and things like that. Hope that makes sense. A lot of situation, a lot of reasoning and rationale why we haven't do it. Again, we do this for a living, and this is why we decided to do it. But sometimes individually, if you're just handling your bookkeeping yourself, it may make sense, which is fine. But we just haven't found that the tools work kind of in the most efficient manner that we need. So I wanted to kind of share that with you. Hope you learned a few things today. Thanks for listening to Making Sense.